Hi, this is Palmer coming to you with another forecast from optionspreadtrades.com. This week we've seen a lot of wild volatility in the market. We entered a straddle this week on the 12th. That was, I believe, Thursday. Or no, it was Wednesday. We entered at 295. It is currently trading, the spread is currently trading at about 317. Dell Computers announces earnings next week, this Thursday after market close. So what we're going to hope for is an expansion in volatility, and we're hoping that maybe the spread that we entered for 295 will be trading for, I don't know, maybe around 375. 395 if we're lucky. Okay, we're also still holding a credit spread that we took on JP Morgan back on the 23rd of October. We entered it at $1.25. The spread is currently selling for 50 cents, so that gives us a $75 per contract profit. If it expires on Friday, this coming Friday, the 21st. So if it expires and it is below the strike price of $37.50, we will take a full $125 per contract profit, or maybe about 2.5% on a $10,000 account, $250. Okay. So 2.5% on a single trade that we had to hold for about a month. That's not too bad. It's not great. It's not like the 17% that we did last month, but given that most people are losing double digits, we're happy with it. Okay, this is a chart of the S&P, a weekly chart. Again, we got a sell signal back over here on the 4th of September. The markets have come down and down and down. The sell signal was at 1262. The markets are currently at 860. Like we've been saying for the last couple of weeks, we are pretty much oversold on the stochastics, but given that the market seems to be in free fall, we're not sure how much difference that is going to make. If we do get a rally above 1008, 1008.50, that will give us a buy signal on the weekly trend. That doesn't necessarily mean we want to be buyers, but at least for the short term, the trend is up if we get over 1008, which it's looking less and less likely that we will in the near future. However, these markets are pretty volatile, so anything can happen. Okay, this daily chart. We got a sell signal back here on the 11th. Again, the stochastics are getting pretty low. They're not quite oversold, so we could still see some downside. But on Thursday, we saw a pretty big pop up. So we do expect that there are going to be some big moves up and big moves down. We want to we do want to be on the short side of the market, but we want to enter our shorts after there's been a sustained rally. Okay, that gives us the best, lowest risk and the highest probability of success. Okay, so with that, this is a chart of the commercials. Here they're in the red right here, and down here these are the commercials, the big players. They are still obviously short, deep in the short territory. And without them moving into sort of positive territory, we're probably not going to see too much of a sustained rally. We may see a bear market rally, but we're not going to see an ongoing long-term sustained rally. The other thing that's going to add fuel to the fire is if you look at this blue line here, these are the large speculators, so individuals with really large accounts, maybe trading millions of dollars. They are starting to reach an all-time high here, which means that they've probably been doing a lot of the supporting of the market, but they're sort of reaching their buying capacity, which means that we may not see too many more rallies. Since they're hitting sort of their buying capacity, they might not be able to buy much more, which means the markets would start to drop again. I mean, they have been dropping, but they've been going kind of up and down, so we might see more of a sustained down movement since the large speculators can't continue to buy and support the market. Okay, so that's our basic forecast. We also have coming up for the seasonals. Wednesday has been up. That's the Wednesday before Thanksgiving. It's been up 12 out of the last 14 times. Friday, which is options expiration date, the S&P has been up 67% of the time, and the Dow has been up the last 4 out of the 5 days. Again, seasonals, they're not perfect. They're just a guide to go by, so we wouldn't make trades alone on the seasonals, but they are something to just kind of look at. As far as a forecast, again, we are getting sort of mixed signals. We definitely want to be on the short side of things, but we're going to sort of wait to enter the short side. We're going to wait until after we've seen some big moves up. That way we know we're getting the lowest risk, the highest probability. In the meantime, we are going to continue to do some straddles and strangles on earnings that'll get us our percentages up a bit higher. Hopefully we'll do maybe 5-10% this month, not the sort of 15 to 20% that we've seen in the last couple of months. But we will get back to that when we see that when we anticipate that the markets are going to make some sustained moves. We'll start taking some directional trades and get some bigger wins. Anyway, we are looking forward to when that happens, to when we see some more sustained trades or some more sustained moves, and not so much back and forth. If you'd like to participate in these trades, please come visit us at www.optionspreadtrades.com and take us for our free 30-day trial. Happy Thanksgiving and happy trading. Take care. Bye-bye.